Welcome to the Big Joel community call, which is now on Mondays. A little bit of tiny housekeeping. If you got the text and you either clicked on it to come in, we changed this meeting from Tuesday to Monday. If you never officially accepted the invite, it didn't move on your calendar. So I've had certain people tell me that it's still showing as Tuesday on your calendar. So if anyone is still having it show as Tuesday instead of Monday, please let us know, or just accept the invite and see if it doesn't move over to Monday. I know there's a lot of Joel people on this call, and I know Joel people on this call use their calendars religiously. So you would want to definitely have this in the right place. So welcome everybody. We're coming into, man, June is moving fast again. This week, just a little bit of housekeeping. Josh, we have so many things that I'm gonna forget something. When's the crush, Josh? The 25th, right?
25th is the big day where a lot of these things are starting.
Okay, so there's a new crush starting on the 25th. I think there's about 4 seats or 3 seats available in that. There's Crush Infinity, which is only for Crush graduates starting on that day as well. That's filling up pretty quickly, but that's a little more exclusive. You have to have been through a Crush group for that. That's all on the 25th. Check the website if you want. I think that's it for quick housekeeping. As in keeping with all your requests, we're going to be interviewing cool people on these calls. We are going to try to keep to 30 minutes. Those of you that are new or first-time callers, we do use the chat. If you want to talk or ask a question, just go ahead and put it in the chat in the Zoom. If you haven't used that before, you can find it. It's pretty easy. Just go ahead and type away. And if it's a question, we will get to your answer. So this week, I have none other than my friend, John Palmiotto, coming in hot. John, are you home? Are you in New York?
I am working from the house, Joel. Yeah.
Okay.
I'm working from my house. Great to be here.
Coming in hot from Albany, New York.
Yes, sir.
And, I asked John if he would be on this week. John is not a producing loan officer, but John is a loan officer's leader for sure, and obviously was a producer for a long time, and probably still considers himself to be a producer like me, because I think once you're in that mindset never goes away. And I did a podcast with John, which is on the website, and it got a lot of great reviews, and people loved hearing from him. And I wanted to get him on and ask him a couple of good questions that hopefully will provide some value. Again, my goal for everyone is that everyone learns at least one thing each week. John, let me start with John. By the way, John, tell everyone your official title, because I will definitely butcher it.
Chief of Retail Production for the Midwest and East at Guaranteed Rate. I report directly to Victor, our CEO.
Okay, and so basically, for those of us that understand geography, pretty much the Mississippi River east, back out Texas. Is that correct?
Yep.
Okay. All right. So John's got a lot of real estate and a lot of big producers, if you know anything about Guaranteed Rate. And he handles it all from Albany, New York, the great city of Albany, New York. Okay. The capital, exactly. So John, real quick, I've been asking all the loan officers, but I'd love to ask you, because you talk to top producers all day, whether you're recruiting them or whether they work at your company. Let's talk about inventory, lack of inventory for a minute. What are you seeing, your big dogs? What are you seeing out there? What are you seeing the loan officers do about that? What are you even doing at your company about that to help your realtor partners? Most prognosticators think this inventory thing is going to go on for a while. It might get a little better, but most people think it's going to go on for a while. They also great agents will say, hey, man, the bus left the depot. If you think the housing prices are coming down anytime soon, you're basically smoking something good, because it's not. It's going to keep going up.
Honestly, Joel, I think strength of referrals never been more important. And when you look at some of our biggest and best people, of course, they complain about inventory because inventory is a challenge. When we hit COVID, everybody started needing different houses and moving from cities into different areas and could work in different areas, and the market exploded along with decreasing rates. So inventory is an industry issue that our people, as I said, anecdotally complain about. But I think our strongest people have disproportionately outperformed the weaker side because the realtor has a much more control over the deal, and the realtor's, more strong in terms of saying, hey, I know you want to do all this, but this is where you go because there's 8 offers behind this house or whatever. So I don't see too many different marketing tactics being used, but I think technical proficiency, having the brand recognition, and a deep realtor trust is a big factor in performing well in this environment.
So technical proficiency, it's interesting. Technical proficiency, it's amazing, John. I was just having this conversation with, I forget who it was. It was probably somebody old. And I was talking about how when we ran, the first loans through DU, and we kind of all looked at each other and said, oh my God, it's over. This is horrible. Loan officers don't have to think anymore. They can just throw stuff in. They can just put 30 grand in B of A and be like, yeah, Jim, I got a DU approval. John just said something. He said technical proficiency. I'm amazed, John, at how many loan officers out there can't really pencil sell or help their agent partners pencil sell. Jen Miklos is on here. She has her mic. She has her camera on. So, Jen was saying, John, 2 or 3 weeks ago, maybe 4 weeks ago, she was one of my guests, that she's providing the borrowers with like multiple options before they go in and really coaching them to help them get their offer when they're one of 10, 12, Jen's in Florida, maybe 15 offers. But so many loan officers literally can't or won't or don't even know how to do that. Yeah. But they can't even help their partners. And I have to assume if you have a strong referral because you have a deep relationship and you're technically proficient and you're taking the time to do it, you're going to sew it up. And that's what you're saying.
Joe, when you talk about technical proficiency too, there is an individual aspect, but like it's also about how you coach your team, so your team that is supporting you is going to do most of the work, especially because you asked about our biggest performers, right? Their technical proficiency kind of changes a little bit in terms of it becomes a team effort. So it's like, can that realtor partner count on your team executing? Victor said something, God, it might have been 2 years ago, and it stuck with me. And I never heard a CEO talk about it in this context, but he's like, you got to realize there's a lot of good companies out there. There's a lot of good people that can do loans well. You have to be good at everything, and you have to have a good price to succeed. But what I see, and when he said that, I was like, yeah, it's the competition is startling. Sometimes we start thinking like, this company stinks or this person's sloppy. The reality is, no, there's a lot of good people you're going to compete with. Look at the people on this phone. We're going to compete for a loan. You better be sharp. You better know your stuff, and you better have your team dialed into the same program and have a predictable outcome for that partner. Because if you don't, you're going to fail. So
and he's using the word everyone, John keeps saying partner. Those of you that know me know there's a common theme with all the people I have on here, all my friends. By the way, there's no prep. We never do prep for these calls. John is saying partner, and what he's referring to is agent. These agent partners, not realtors or not my realtors, your partners. And that's the way you have to think about it. And I have to tell you that, relationship rules, John, I say this all the time, overrate all day long. If that referral is strong and you know what you're doing, you're getting it. If you're the one that can talk to the listing agent and sell it through, and the listing agent completely trusts you, or maybe you and your team, your person's offer is going to make it through. So you all just heard, 5, 6, 7, 8 weeks in a row, the same message, relationship. And John said technical proficiency. I know he was referring to a team working together. I took a leap off that and went, hey, yeah, your team needs to work together, but you also need to know what you're doing. You're going to be writing so many letters. If you're taking somebody and you're pre-qualifying them, for an ADL TV, and they're out looking for houses, and they don't have money coming out their ears. If you haven't showed them what a 90 with lender paid MI looks like, you're insane. Because once they start to go buy something, the price might be driven right up and they can't do an 80 anymore. So if you didn't do that, you can literally just bomb the whole deal for your agent partner because the clients are freaked out because you never even showed it to them. They weren't even prepared for what was going on. John, what are you seeing, for the rest of the year as far as refinance volume? I know we're seeing the switch over. It's happening right now. Talk to us a little bit about that, what you're seeing at a high level, because you see a lot of people.
Definitely. I'll tell you one thing, being in the business as long as I have been, through different cycles, particularly the big economic crisis of 2008, I've lived through with some of the folks on the phone right here. My cynical side tells me there's a little bit of a cliff or a downturn coming, because we've seen it. What I'm getting internally from our leadership and just from the people we deal with that are dealing with forecasts is that we're pretty bullish on the rest of the year. There's a lot of capital coming into the marketplace, obviously with the stimulus bill and other things, a lot of foreign money coming in. The general consensus is things are going to run up. They're going to continue to run up. It's going to be pretty strong right through the end of the year. As far as the refis go, who knows? I mean, probably slightly increasing rate market, but that could change very, very easily. But we're still staffing, hiring, and building our infrastructure, assuming like we're going to have another year of growth at a pretty significant rate. So we're bullish on the market.
Yeah, I'm watching great loan officers just flip their business as I'm talking to them. And I say, "Oh, how many loans are we closing in June?" And they say, 38. And I say, "Oh, that's great. Let's talk to me about purchase refi. 29 purchases, 30 purchases, and 8 or 5 or whatever it is refis." And then if we compare it to June of last year, or July or whatever, it just looks very, very different. And I'm watching them just work really, really hard. And the message, John, that I'm giving everyone is that, listen, there's going to be a lot of loan officers back selling cars pretty soon when they go from, closing 10 refis a month when 2 purchases down to 2 purchases, and they're busy screaming and yelling, "I need help. Where's my LOA? How can you take my LOA away? I'm a big producer." No, you're not, dude. You're closing 2 loans a month. Okay. No. You don't get people holding your hand anymore. You actually have to work. And I see a huge opportunity, especially for the people I'm blessed to work with, to just literally take market share. I mean, just mow people down. There are so many loan officers, even in this market, that aren't able to perform because they don't know what they're doing, or they can't manage their way through their own company, and they're ball dropping all the time. I mean, I'm seeing what we call rescues almost at an all-time high, which I can't even, it's unfathomable to me that, there's so many rescue deals. You know what I'm saying? Meaning with how good the credit market is, that there's that many loan officers screwing up that many loans. But
it's still complicated though, Joel. Like you look at the jumbo lending space, you look at high val, self-employed with COVID, even though we're coming out of COVID, it's still pretty complex, know? And the good people that can execute are going to outperform,
I love when they made those self-employment changes, and I was cracking up. I was talking to a loan officer who shall remain nameless, who was really pissed about it, and I was just laughing. And he was like, "Joel, why are you laughing?" I'm like, "Because all they did was put it back to what it used to be when I learned. This isn't new. This is the same. You guys just had lax stuff. You were just getting away with stuff you shouldn't get away with. Not the COVID stuff at the end, of course, that's new. But I mean, everything else is the same. I mean, that's how we qualified somebody. You had to have those docs, if you were truly self-employed or whatever. John, what other trends are you seeing? What are you seeing interesting going on in the market? Whether it's marketing related, sales related, where just anything in general.
Yeah, a couple things. Marketing related. What I see our people doing, in the highest level people, is their marketing systems are dialed in. They have a process that keeps branding them in the marketplace. They're running their operation more like a business than just being a one individual salesperson. So I always use the analogy, Kurt or Ed or somebody that's recruited with me will probably like roll their eyeballs, but it's like, there's a shovel and there's snow and you got to move snow, right? So you can't keep shoveling snow manually, right? To move the snow, you need a good machine that's going to get rid of the stuff and keep you out there. So I think focus on all the marketing systems that are available to you, utilizing the CRM to its full ability, Yext, Yelp, all these different little things, they all add up and they compound when someone's building a business. And if people aren't taking advantage of that, I'll call it the digital world fully, other than just posting, food, or in my case, hikes and stuff I like to do, they're missing the boat, because the people that are branding themselves like a company, they're winning big. The other thing is, coming out of COVID, we're getting to a situation now where we can start doing events and being aggressive in the marketplace. I think there's a pent up demand for agents, or partners, as I call them, to be entertained, to be engaged with. People want that. So if you're slow on the draw coming back out into the marketplace with that kind of activity, probably going to be a little bit behind. So those are two. I don't know if that's answers your question.
But I'm seeing that in my own personal calendar, John, because I'm back out doing that now. In fact, Rick Sedbury is on here right now. I'm going to see him tomorrow at a live event in Louisiana. I think, Rick, you can just do this by thumbs up. The agents are very happy about that event, right? And it's not because, oh, Joel, it's because, oh, cool, we're getting back to normal. We're going to go have a beer and have a sandwich and whatever, and do something like we used to do, and
definitely.
I'm hearing that feedback from all over, even in the hardest core lockdown states. Obviously Louisiana wouldn't be one of them, but even in Connecticut, Rhode Island, in some of the major lockdown states, I'm getting the same feedback from the loan officers. The agents, they want to go to lunch, they want to be out, if there's some type of event, they're in.
Right. Joe, I had an epiphany. I was at, you're a big Orange Theory guy. I was at Orange Theory Friday night for a charity event, and I ran into people, and we were talking about the last time we did something. And I was like, oh yeah, we did that last year. Then all of a sudden we started realizing last time we engaged as real people and did whatever it was we were talking about was actually a year and a half ago. It was the year before. So there's this whole year, this lost year where we haven't engaged as human beings. And I think that, a lot of the partners out there are going to get excited about that. And you talk about converting from a refi market to a purchase market. If you're the one getting out there more aggressively, driving these events, engaging it, you're just going to win more. I think it's going to be to your advantage.
I mean, it's the double D, or the D. It's develop. What have you done today to develop a new relationship or deepen an existing relationship? Literally, what have you done today? If you ask yourself that question at the end of every day, what have I done to deepen an existing relationship or develop a new one with an agent partner? What have I done today? And if the answer is 0, then you basically failed for the day, as far as I'm concerned. I know that sounds harsh, but the whole day.
Yeah, think about it. People tell you, like, don't go to the supermarket unless you're full. Because if you go to the supermarket, you buy more, right? When you go, you're hungry, you're buying everything because you're starving.
Right.
The truth of the matter is that we've been full, chock full of loans, pipelines are full, people are making money. It's a lot harder to be hungry and have the mentality, I'm going to go out and attack the market. But that's actually, right now is actually the time to go do that, because a lot of people are full, they're not hungry, and they're complacent,
I'm taking that. I'm stealing that. That's mine now, but I'll quote you. I'll put the JP on it. That is awesome. And so the be hungry piece, John, most of the people that hang out with me are hungry. Like you'd like all of them because we're all the same. We're all the run through wall crew.
I'd like them more if they worked at GR, Joel.
Yeah, but what a great comment. What a great takeaway for everything. We are full. I mean, we are full. I mean, we have had years. There's people that are embarrassed to tell their friends, how much money they earned last year or the year. You're right. It's a year and a half, John. How much money they earned in 2020 or even year to date this year. Because either their friends are, I don't want to say they're hurting, but they're just not earning at the same level, or they're in an industry that wasn't, that didn't thrive like we did in COVID. And, it's easy to just be sated and be full and to think you're you're kicking butt. I'll tell you right now, man, you grab your closings for the year for January, go January, February, March, April, May. You look at where every single one of those closings came from, who referred it, you back out all the refinances and you just take a hard look at it. You know, and you see, how hungry are you? When is the last time have I physically seen these people, talked to them, done anything meaningful with them? When? And the best loan officers in the country, John, they're going to be like, yeah, 2 weeks ago, a week ago. Like, they have good answers. they have good answers for when they've been in front of somebody. But wow, how easy is it? I mean, how many loan officers, John, do you know that work for you? And you have thousands, you know, going all the way up, that like bought a maxed out second home this year. You know what I mean? Bought a boat, you know, did something with their hard work, which is fine.
Yeah.
You know, and then how many of them are just on coast? You know, they're like, all right, I'm good.
Yeah, no, it's an interesting thing. I mean, first of all, I feel fortunate for the opportunity that we had, you know, even though it was, of course, tragic for the country. And I had personal family members that were impacted. So I got it firsthand. But I'm grateful for the opportunity we've had. And I've seen a lot of our people, they've been able to do a lot of things financially that they didn't think possible. Fund their kids' education, pay off their homes, buy a second home or something like you're suggesting. So it's been really good. But one of the things I've always been driven by in this business is fear. I think we all do. You know, you have fear about you, like what's coming. Can I keep doing what I'm doing? Am I going to be as good as I was? And I think that fear is important because that'll keep you kind of on edge and hungry. And and it's only natural when you have a long period of time where there's that kind of success to get a little complacent or lose some of that fear or edge or whatever it is. But I think your exercise is awesome, Joel. Back out your refis and take a look at your pure purchase business and say to yourself, is that enough? Is that going to make me happy?
It's like we used to, John, in the way back when, in one of the first big epic refi markets in the 90s, every month back then, we all got paid monthly. I would have all the loan officers come in my office and we would take their production and we would take their check and we would back out all the money they earned off refinances. And I would make them almost in front of me write checks and put it in their investment accounts. They weren't allowed to use the money. They could only spend the purchase money. And boy, did that create some loan officer animals, some great loan officers. And that was just cream on top. That was just, and all of them have lots of money put away right now because they literally didn't spend it. They just spent purchase. Of course, they kept growing their purchase business, but what a great way to look at it and to sort of humble yourself. Yeah, look, no one else should refi your customers but you. Don't get me wrong. No one else should be doing refinance for your customer but you. But at the same point, these refinances are based on rate. Rates go up and rates go down. Purchase business, people buy when the rates are 10%, people buy when the rates are 4%. You got to buy. It is what it is, Sean, of course. Oh, that's a direct message. I should read that out loud to everyone, right? Anyway, he just made a joke, John. He just made a joke, John. John, you know Sean. Yeah. Anyway, check out Sean's hair, by the way. We have. Yeah,
I noticed that.
We have a 70s radical on the call right now. So, John, you've said some awesome things. I love fear. John, I don't know about you, but way back when, no laughing, when we had pagers. Man, if I went for like more than 45 minutes without my pager going off, I was literally just a mess. I was like a pool of mess. I was like, what's going on? The market's completely stopped. What's happening? Then when you finally take your pager off and you still feel it, that fear, that go get them. The full thing is incredible. The be hungry. What a great message. Be technically proficient. John was talking about team, which I completely agree with. You're doing a lot of business. How is your team? How is your team rolling? How are you handling the customers coming in? I added on to that you need to be technically proficient. If you don't, I don't know where Michael Most went. John, Michael Most has me at the end of June. He's got his whole team in a room with me. And guess what we're doing? We're doing 1003 app dirty, as tactical and dirty as it could get for 8 hours. There will be crying involved. Meaning because a lot of loan officers were never really taught how to interview a borrower.
Yeah.
And it all starts right there. If you don't do a good job right there, your team can't even do a good job. Or if your team's doing it, they better know what they're doing. You know?
The other thing too, Joel, we see a lot is like, hey, do you have meetings with your team? No, we talk all the time.
Yeah.
But there's definitely a difference between talking and having a structured meeting, and then there's an expectation, like you got to come in and have something to talk about and be prepared. It takes a different form, you know? And that's the time to set expectations and look at it broadly.
I mean, the best loan officers in the country, period, hands down. You are correct. You said it before. They're not in the mortgage business. A mortgage is their product. They're running companies within companies. They're using a platform, so-and-so on guaranteed rates, so-and-so on Movement, so-and-so on Loan Depot, whatever. They're running their business on a platform, and they're running it like a business. They could be selling pencils, computers. It doesn't matter. They're running it like a business, even though it's a little complicated. It's a lot complicated, but it's still a business. When you look at it like that, it's potentially, a lot easier. Everyone, just a little baby housekeeping. I have a full podcast with John. It's on my site if you want to see it. We did it in a TV studio, so it's audio and video. It's really great. We got lots of good reviews. John, if people have questions for you, want to ask you about anything, what's the best way to find you? Josh can put it in the chat. Facebook, direct.
Just text me. I'll give you my cell phone, 518-469-2441.
Josh, did you grab that? One more time, John, because Josh is going to put it in the, go ahead.
518-469-2441.
Okay, so everyone, that's in the chat. You're going to need to pull that off because as soon as the call ends, the call's over, but most people on this call are connected to me, and I can give you John's mobile as well. For some reason, you didn't pull that off. I just want to, yes, sir.
Can I give you some props? I just wanted to tell, for those that are on the call don't understand, I remember when Joel started this from its infancy, and just, Joel, you've done an amazing job building it. You've helped so many of our people, and I get nothing but positive feedback on your coaching, and I appreciate the partnership. So congrats to you. You've killed it.
Oh, thank you. I appreciate that.
Yeah.
I didn't even have to pay him, but Josh put like something in the mail to him, maybe $50 to Best Buy or something. Everyone, you heard some great stuff here. Obviously, this is on YouTube. It's going to be on Facebook as well. John said a lot of really key things to take away, that were very strategic. Not necessarily bang that nail into that board. It was where we buy in the boards. Very strategic, not necessarily tactical, but great takeaways for a Monday as we move into a couple of big months here in the summer. Just good stuff even with the be hungry and we're full and don't be full is a great takeaway for everyone. So again, everyone think about it at the end of the day today, 5:00, everyone do me a favor, 5, 6, 7, 8, I don't care, whenever your day ends, close your eyes, say to yourself, what have I done today to deepen an existing relationship or develop a new one? And for some of you, how many times have I done it? The other thing I'll challenge all of you to do is do what I said, go back January, February, March, April, May, every single loan you've closed, where did it come from? Then parse out purchases and refinances and stare at those purchases and say to yourself, what have I done to deepen the relationships with the agents that referred me these purchase loans? Literally, what have I done today, yesterday, in the past week, in the past 2 weeks? The COVID excuse at this point is pretty much over. You've heard John say it. You've heard me say it. These agents want to engage. They don't want to engage on Zoom anymore. They want to engage. So get out there. John, one more question. Are they going to do triple play?
Oh yeah, it's on.
They're doing it?
Yeah, we're planning it. We're planning it.
Oh, awesome.
Yeah.
That's great. Sorry. Every year, John gives me an invite to triple play. So, I think I'm special every year, even though he gives a lot of people invites. But anyway, everyone, thank you so much for your time. I'm looking at the time. It's 2:31. John, thank you so much. I know you're slammed. I really appreciate it. Everyone have an awesome week and kick some butt. See you later.
Appreciate it, guys. Take care now. Yep.